Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, November 29th, 2011 is sponsored by Realtik. All right, guys, let's get into the mix today. Markets are rolling over a little bit, but still holding on to the positive side on the day. Key is Dow up 37 points, but Nasdaq is lagging today, only down about 16. So I mean, it's not down a huge amount, but considering the Dow and S&P's up about 2 points, to see the Nasdaq negative is something that you want to pay attention to. Now, to offset that negativity in the Nasdaq, I think it's important to remember that the Nasdaq was up the most yesterday. So Nasdaq up the most yesterday. Today, it's down a little bit, while the Dow and S&P are up a little bit. Now, there are some concerning factors, and in all fairness, folks, I called the rally last week, positioned our members here at In the Money Stocks on the long side over the course of mid last week. We made great money. We're still making good money on the upside, but I do see some major warning signs coming in on the charts, and I want to show you them now as we go into this video. First off, you have to look at the intraday chart. You came up here, you took out yesterday's pivot high, which was positive. You came up here to this resistance level right around the 120.85 level, 121 area, and you stalled out. So that's the first thing. You just want to pay attention to the intraday because that is showing a little weakness there. You have this nice little tail where you made a new high, reversed, and then you came back in. The negative here is you have now broken below the 50 moving average and the blue line. So on a technical basis, this blue line, which was major support once we got above it, has now been broken to the downside. That leaves this market open for further downside. There'll be a little bit of gap fill right here as support, but if you take this out, you're going to go all the way down to the 200 moving average. So there is a possibility we could see a little bit more downside today if we get through gap fill, which is right here at the 119.70 level. All right, so again, intraday chart is a little shaky right now. You have to just look at that, and you could easily see that's the case. Now, there are some bigger issues over the longer term that I think we must bring to the forefront. These are the ones that are keeping me on high alert with the few longs that I have left over after we've taken some profits and our members have profited on our long calls from last week. And again, the key is to take some off the table and then leave some on the table with break-even stops or, just holding steady right where they are. And that's exactly what we've done here. And by the way, folks, if you want to get involved and join In the Money Stocks, the elite community where you get swing trade alerts and you get videos and you get every single thing, including proprietary technical analysis techniques that even the institutions are not privy to, then you come right here to In the Money Stocks and you take the 7-day free trial. 7-day free trial. Join the research center. If you're a worker, 9 to 5 kind of person where you can't be involved 24/7 in the markets, if you can pop into a chat room, then you take the 7-day free trial also of the intraday stock chat. And that will enable you to ask questions live, view my charts live, view my partners' charts live, get day trades, get swing trades live. You'll get it all, essentially. And the research center is great for the swing trader. If you're more of a swing trader and day trader, then the chat room is also good for you. 7-day free trial. Now let's go into that factor that's a very key worrisome thing. Now, one thing I talked to my members about last night in the nightly video that I put out every single night, it's about a 30-minute video where I cover the hardcore technicals of the market. We go over the proprietary techniques, which is really the standout here at In the Money Stocks, is that these techniques institutions aren't even privy to at this point. But look at the avenue that JPMorgan took to the downside yesterday. Yesterday, the markets were up 2.5%, 3.5%. I mean, it was a great day. Average 3% gains across the board. Why was JPMorgan falling apart yesterday? That's not a good indicator for the health of the market. Yes, you had a good rally. Yes, I called it perfectly. While everyone else, including CNBC, was spitting doom and gloom, we were out there buying the market and telling our members to do so, and it worked beautifully. However, this is something you want to pay attention to. JP Morgan rolled over. Not a good day yesterday considering where the markets were yesterday on JPM. Today, look at JP Morgan. Lows of the day right here. It's going to have some support here, but again, it's down 60 cents. 60 cents. That's not a good signal on JP Morgan at all, folks. At all. All right? So you're seeing the financials, and this includes even Goldman Sachs. Take a look at Goldman, guys. Look at Goldman's rollover. I mean, this is an ugly rollover on Goldman Sachs, although it is coming into some support down here eventually. This is not what you'd like to see if you think the health of the rally is key. All right, if you think this market's going to continue to rally over the next couple weeks going into Christmas, then this is not what you want to see. Financials are the leading indicator. I repeat, financials are the sector that will tell you the health of the rally. And obviously, based on this movement in Goldman Sachs, JPMorgan, Morgan Stanley, it is telling you there is something not quite right in this rally. Now, should the financials all of a sudden rebound tomorrow and the next day and start to lead the market, then if you ask me, I would say the rally probably lasts for a multi-week period. If we continue to see this tomorrow, I think this rally is almost done. So watch these stocks. You must watch these stocks. These will give you the breadth of the market, the overall strength of the rally or the decline. All right, so again, ugly movement in JPM, ugly movement in Goldman Sachs. All right, Morgan Stanley's getting hammered today, down 50 cents. And remember, Morgan Stanley's only a $14 stock. I mean, $13, $14 stock here. 50-cent drop in Morgan Stanley's ugly. If we take a look at Citigroup, that's flat on the day, but look at that rollover. And also, we can always look at Bank of America, which is down 20 cents, and that's a big break here. One thing that you're watching on Bank of America here is this pivot double bottom. And look at that. You're now borderline breakdown on Bank of America. So, again, yes, it's nice. We made great money yesterday. We're still holding flat on the markets today with the Nasdaq negative, but the rest of the market positive. But there are very key things you must pay attention to here on the charts that are telling us to be very conservative in terms of buying anything else. Obviously, we're not buying. We bought last week and we made money. But the key is be aware. This is a warning sign. A shot across the bow, if you will. All right, let's take a look at a couple other things. How's Apple Computer performing today? Apple is also negative, down about $4.15. Let's go to the intraday chart of Apple. Apple's consolidating right here on the 200 moving average. This could be looked at as bearish consolidation, so be very, very careful in terms of thinking that this is a long here because it's on the 200. The amateur would look at this and say, oh, it's holding the support. It's a long. Not necessarily, folks. Bear flag in spirit of could be telling us a drop is coming to the downside here. Okay? So watch that very closely. Let's take a look at Amazon, AMZN. Also, after a monster day yesterday, it is pulling back. If we zoom out on the charts, you can see this is a little pivot right here. See this line? Isn't this amazing? I love how the charts work. Look at that. Pivot high right here, pivot low today, and it's holding there. Now, it's hit on this level twice. That's a little double bottom right there. But the fact is the 20 sloping down, 200 just above, getting a small bounce. I'm not sure how long that bounce will last. So, again, keep an eye on the financials. If the financials gain some traction later today, this market could easily move back up to the strong side here. But again, any sort of weakness in financials, I think most of these stocks will be breaking down. And again, it's all about those financials. I'm neither a bull nor a bear. And I don't ever want to be a bull or a bear. All I am is a swing trader and a day trader that looks for price pattern and time using our proprietary signals here at InTheMoneyStocks.com, and I will position myself accordingly and make money non-stop. Early last week, we were covering our shorts. Our members, we gave the signals to move out of our shorts. Then we accumulated midweek. Early this week, we started to take profits on our longs. It's what we do. Go up, go down, I don't care. I'll make money. So will you if you join InTheMoneyStocks.com. Take the 7-day free trial. Easiest thing you ever did was fill out a little form to take the 7-day free trial here to the Research Center or the Intraday Stock Chat. No obligation. You just cancel before the end of your membership. You're not charged. So simple. Even a caveman can do it to steal from Geico there. All right, guys. Enough said. Let's just go check in on the spiders one more time here. And we bring up the spiders. You can see they're trying to hang on. If we recapture this blue line, that would be somewhat significant, but you still have the 20 to get through here. A little bit of a bounce coming in right off of gap fill here. But overall, folks, the market's a little on the weaker side this afternoon after being strong this morning, and it's all about the financials. Take care.